Okay, so if you are new and if you don't want to go to get into a fog and get frustrated, here are some tips which you can do starting today to make sure that you are on a very sound footing and you build a long-term age which will last you for your life. And what are those steps which you can take? Basically, the steps which you can take. The first one is to establish a base level understanding, structural understanding of the market. Look, and what happens in the market, right? And what are the things? The market moves in momentum burst of 3 to 5 days. Now, this is something which is inherent to the nature of the stocks move. Whenever stocks move, they move in 3 to 5 days. 3 to 5 days, taking 8 to 20%. When they move 3 to 5 days. When they move 3 to 5 days. Now, that basic understanding is there, then you will be able to swing. If you cannot understand that, or if you don't have that understanding, then it's going to be very difficult for you to create a strategy for swing trading. So this momentum burst as a structural understanding or understanding that markets exhaustions, which is when buyers are exhausted, then it leads to a reversal. A good example of that is when you had a 3 days or 4 days or 5 days of buying, and this was a signal for a buyer exhaustion. When buyers are exhausted, what happens is it leads to a reversal. Similarly, when selling is exhausted, selling exhaustion leads to buyer stepping in. So exhaustions, which are basically selling exhaustion and buying exhaustion, is one of the things which similarly volatility. When volatility is very low or where the volatility has compressed, volatility cycles, that means like in a low volatility periods are followed by high volatility period. So these are structural tendencies of the market which are been there since the market started trading, and they have not changed and they are not going to change in your lifetime even if AI takes over your life, right? And this is not going to change. Exhaustions, volatility cycle, then PETS, which is post earning announcement drift. If there is a stock which has a surprisingly good or surprisingly bad earning, then the stock is going to move in the direction of that earnings, right? That's a post earning announcement drift. This is another tendency of the market which is not going to be, and these are structural tendencies of the market. Momentum, stocks with momentum continue to move in the direction of momentum for 3 to 6 months, and stocks with long-term momentum tend to mean revert. So that's another one of those things. Smaller stocks, smaller capitalization stock make big moves on both direction. That's another one of the stock market's inherent tendency of the market. This is something like the Newton law of the market, right? And this is not changed, or this is the fundamental way in which when markets move, this is what is going to happen. And you need to have a good understanding of this, and understanding of this can be derived, or you can become good at understanding this by doing a deep dive or spending a lot of screen time. So if you are new to trading or to even this website, I would recommend doing at least 1,000 to 5,000 examples deep dive to establish for yourself whether momentum burst. I told you that stocks move in momentum burst, right? But it might be that I am just telling you lies, right? And you need to establish this truth for yourself, whether when stocks move, do they move in momentum burst? Do they actually move in 3 to 5 days? Or are they moving in 8 to 9 days or 10 days? How does this, what happens on the first day of the move? And what happens on the second day, what happens on the third day. This has to be established, and in order to establish that, what you can do is you can do either a deep dive where you start with stocks, like you go into something like universe and ETF. So this is like without ETF, right? And basically with liquidity, and just start looking at each and every stock in the thing and establish whether when the stock moved, did it move in 3 to 5 days? Did it make 8 to 20% move, right? And as you keep looking at this, either you can do this by capturing screen images, marking, then marking where did this move start, which should have been the buy day on this particular stock, which if you wanted to short, which was the ideal day to short, and like that. So simulate it. You can do this two ways. You can actually capture, and you can see a lot of deep dives which members have done previously, but watching those deep dives is not going to be same as you doing it yourself. So if you want to make $1 million, the first step in making $1 million is to start by doing deep dive, or alternatively you can do a screen time. In screen time, what you'll do is you'll take this particular thing and just keep looking at it, mark for yourself to see, okay, this was a, so where was the range expansion, how will I know this was a range expansion, was it a 4% breakout, right? Was it a range expansion? And then calculating how much did this stock make a move, and how many days the move lasts, how do the move on the short side work, how do the move on the long side move work, and keep looking at it and keep looking at it till you yourself can say that ki, yeah, I checked it out, right? And it's like when you're in school, high school, in science, you did experiment to figure out whether Newton's law of gravity is real, right? So you went and sat under an apple tree and asked your friends to shake the tree. And when the apple actually fell on your head, you realized, okay, oh, this is true, right? And basically, that same way you need to do the experimentation so that you are very clear that this is the way it is, because you have to convince yourself this is the way the market works. Otherwise, like in a, if that understanding is not there, then you're not going to be able to identify these setups in real time. So this deep dive screen time, the more you spend deep dive and screen time every day after the market close, spend 1 or 2 hours going through a deep dive, look at like a 20% plus study, see what is happening on those stocks, why are they moving, how do they move, when they move, how much move do they make, why do they do it that way. Once you have that clarity in terms of like every single element of this structure which you are going to trade, if you are going to be trading 3 to 5 days, then you need to be very clear. If you are going to be doing a day trading, then you need to understand the structure on the lower time frame. How do the stocks make move on a lower time frame? Do they make move in 3 to 5 candles, or do they keep on going up and up and up, or do they move in 3 to 5 candles? How do I know this is the start of a this is likely, this stock is likely to go up? If this happens, what is likely to happen next? If this happens, what is likely to happen? And so on and so forth. So this, unfortunately, there is no shortcut to this. This is the foundation. And if you are not willing to do this, I think you are better off finding something else to do, or like basically uh, be realistic that without a deep dive, there is no trader which I know of, and which you can find out yourself also, who have been highly successful, who have not spent hours, weeks, months doing deep dive. So if you believe that you can like you are such God's gift to trading that you can skip this, okay, I have a news for you that look, better find some other job, maybe like become a AI coder or something like that, right? And basically you are not going to make it, right? And there is just no way you are going to make it if you are not putting in screen time. And especially for those of you who are going to be doing day trading, uh, you have to do lots and lots of screen time. So much screen time, like look at every intraday move, and then see what is the how did it happen, what is happening, and keep on looking at intraday moves every day. See, okay, how did like a move on Eli Lilly happen intraday? Mark where are the buy points, where are the sell point, how did it happen, right? And then what happens when this happens? So this is the thing which is happening, right? If you want to do position trading, it's the same thing, right? uh, there is nothing different. If you are going to do position trading, you need to understand growth investing, you need to understand value investing, you need to understand turnarounds, and you need to do deep dives. So you should be having 300 examples of a growth stock from last year which has made a big move because they had a sudden acceleration in earning. So you will have, say, stocks like this EOAC which made this kind of a move, and then you will see what really led to this kind of a move in this stock and find them, right? Or you will have like an SNDK kind of a stock and study them. And if you study 1,000 examples of SNDK kind of a growth stock, then you will be able to do position trading. So screen time, this is the key. The more screen time you do and more deep dive you do, and when you do this deep dive or screen time, the first time you do a deep dive, you're not going to understand much. First deep dive, at best, you will have a 10% understanding. If you start doing a deep dive on momentum burst, the first deep dive you will probably get only 10%. But if you do it second time, you will have a 30% understanding. By third deep dive, you will have 60% understanding. By fourth deep dive, you will have 80% understanding. And by fifth deep dive, you will have 100% understanding. So one deep dive is not enough. And so I don't want people to believe unrealistically that look, and they can just start printing money in stock market by just joining some site, or like putting some indicator on a chart, or like just taking a trade somebody talked about, right? It's never works like that. Screen time, if you cannot like do screen time, uh, literally you're going to lose money, and that is the foundation. Ask any trader who's been successful, and they will tell you the same thing. Then, what exactly is deep dive? There is whole host of things which you can see here. You are trying to establish in a deep dive whether this is true, right? There are like so many deep dive videos. Go through them, right? So many of them are there. And there are thousands of deep dives which people have done and posted on the timeline. But here is the thing, right? If you start looking at somebody else's deep dive, that's same as like going and looking at a porn site and hoping that your sex life is going to improve because you watched somebody else's sex, right? And so it's not going to happen, okay? So I would in fact recommend not to look at anybody's deep dive before you do your deep dive. Because if you start looking at somebody's deep dive, you're just like wasting your time, right? And you have to do this yourself. After you've done 3 deep dives, then go and look at somebody else's deep dive. So that's the thing, okay? So any questions on this till now? Structural understanding, deep dive? No questions. So then once you have a good understanding of these things is when you have to start putting your process together in terms of like, okay, I'm going to trade momentum burst, right? So if I'm going to trade momentum burst, then I need to have a process to trade momentum burst. Or I'm going to be trading something like, say, uh, PIDS, which is like a EP is based on PITS, right? So then you can start doing a like, right? Uh, and once that process establishment will involve what software I'm going to use, what scans do I need, what data sources do I need. If I have to trade momentum burst, what scan can I find the momentum burst using, what software do I need, and make that decision and stick to that decision. Stick to that decision. And then start trading with, if you are new, completely new, I would recommend just start trading with 5 shares to first establish your ability to enter, identify a setup, exit a setup, to put a stop. So in that way, you're not going to be losing big money. And once you have process kings removed or any problems in process removed, then you can increase it to 50 shares or 100 shares or 500 shares or 5,000 shares or 50,000 shares. If you start bang, 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 just start like in a running scans and doing things without having this background, and start with size. By the time you figured out what is momentum burst, your account will be down 50%. Yeah. So this is the pathway for new trader, where you decide, you first try and understand basic level of how the market, or what are the structural tendencies of the market, and then establish for yourself whether those tendencies are true or not, right? This understanding of these momentum burst, exhaustion, volatility cycle, PITs, momentum, small stocks make big moves and all, this thing is the foundation. And if this foundation is not strong, and if you have no idea about this, everything else, your house is going to collapse because you don't have a foundation. Similarly, if you're going to be trading, day trading, equivalent of these you need to have for day trading. And once that is established, the foundation is established, is when you can build the pyramid. If the foundation is not there and you start building the pyramid, your pyramid is going to collapse. And this may not be something which you want to hear, but this is the starting point for any new trader here in this field. This is like establishing, if you go and do, say, medicine, right? If you join a medical college, are they going to tell you next day, okay, come on, get ready. Tomorrow we are going to do a brain surgery and show up with your best dress and start doing brain surgery? Or in first year, what do they teach you? First year, you are going to have a book called Gray's Anatomy, which is like basically going to be some 10,000 page book. Like, how many pages are there in Gray's Anatomy? Then you learn 1,624 pages are there in Gray's Anatomy, right? So that, then you learn anatomy, physiology, biochemistry. Typically, those are the first year courses, right? And then you have a basic understanding as to how human body works. What is the anatomy? You know where the bone is, right, and where the tailbone is, and things like that. And then uh, next year you will have like pharmacology and physiology and things like that, right? So that's the thing. If you can do this, you can also you can make 100% plus also return. You can make 10,000% plus returns also, right? And there is stock B members who have made millions of dollars, 100 million, who will come in the next book, a Market Wizard book, right? And two stock B members have made more than 100 million, right? Starting with like some 5,000 or 6,000. So you're not going to make that in first year, right? And uh, if you don't have that background, you will have very difficult time, right? And if you can do this, it is going to be, if you are a day trader, you can make like 5% in a day also, right? So it's a question of what style you choose to do and how much size you want to do. Your objective should not be to make 0% in first year. Your objective should be to speed up this process. This whole structural understanding deep dive, how much time should you take to do this? How much time is required to do this? At best, 4 weeks. If you're talking about 3 months, you're wasting your time, right? At best, this can be done 1,000, 5,000 examples, like 1,000 examples people did in one night during the boot camp, right? Those of you attended boot camp, did you do more than 1,000 examples in one night? Did you do a deep dive of more than 1,000? In in 3 or 4 hours, people did 1,000 examples, right? So it's not like you need to have 3 months to do this. At best, I would say 2 weeks. At best. Once this is established, you have a very good understanding, because if you don't understand momentum burst, can you realistically trade momentum burst if you don't understand momentum burst? If you don't understand start up a swing, uh, can you really make money? Ask that question, right? That's the thing. So this whole process, if you are new, should not take, all these process should not take more than 4 weeks. Total of this. Total of this. 4 weeks. If you are going to be planning to do it over more than 4 weeks, then I would say that look, and basically you're doing it wrong. Right? Any questions? And I highly recommend not to look at other people's deep dive, because then you're not really like going to be understanding, right? And just like getting in like directly going is not going to be there, right? And a process, as I said, right? And I just made videos like last week only, right? And showing my process for yesterday only I did a process NTRT MTRT, how I run my NTRT MTRT process, right? How I run my combination scan, how I run my this thing, right? Yes, we look at like we go long and short based on what the market is giving us, right? What catalyst? This kind of a question, is it relevant to what we are discussing? If you are those question, go through the whole discussion on NTRT, MTRT, EP. What are we looking at in looking for EP 9 million and all, right? And this is for beginner, right? And basically, this is for beginner who are like new to the thing, right? Any questions, especially the beginners, right? And start with structural understanding. Structural understanding of the market. You have to have structural understanding in any field if you are going to do make money in that field. If you want to become a plumber, you need to understand how liquids move, right? If you don't have that understanding, do you think you will be a successful plumber? Interactive broker. Here, if you see structural tendencies of the market, there are videos on this. There must be a lot of articles which I made like so you'll have like a lot of um, things, right? And basically find structural analysis of the structure, momentum burst, momentum, peaks, volatility contraction, buyer and seller exhaustion, extreme bearish breadth, buy the dip when the Fed is active, plastics. These are all the structural tendencies of the market, right? And basically, then stocks move in momentum burst. Go through all these. You will be having like a good understanding of the structural tendencies. Interactive broker video. High setter interactive broker. There is so much information, but like you can get lost. This is why this pathway is important, and which is to go through this pathway of first establishing base level understanding. Look, and if you are going to be trading 3 to 5 days kind of a moves, then it is based on momentum burst. And if you don't understand momentum burst, will you be able to make money trading that kind of a setup? Tell me. If you are going to be trading reversal bullish and it is based on exhaustion and you have zero understanding of exhaustion or how exhaustions work or why exhaustions happen, do you think you'll be able to make money? There's no 70% win rate, right? You don't need 70% win rate to, if you are like doing a scalping, 70-80% win rate. If you are doing this for 3 to 5 days with a situational awareness, 50%, 55% is more than enough, right? And basically, how was not that a good move on market? Like what market, what did market do on Friday? On Friday, what did market do? But again, is this really relevant to like what we are discussing, which is like new people, how to get started, right? And basically, that's another like in a first realization for some of you who are like here, right? When I do these sessions, I do it for the new people, right? And 288 and 145. Is there any like if the market had reacted positively to a catalyst, what would have been this day number of days? This would have been 500 plus, 600 plus. There was nothing. The market yawned, right? Market didn't even react to that particular. This is like actually 189 and 236, right? So there is no real buying which came in into the market based on that catalyst, right? There are no scan for IBKR. Scanning, you need to get a scanning software, whichever one which fits your budget and whichever fits your like understanding of software. I use TC2000. Some people here use what TradingView. Some people use that Think or Swim, or some people use some other software, right? That is not right. Yes. Yes, start with like in a first, even before 4% breakout, just establish momentum burst. What is this momentum burst thing, right? Do stocks really move in 3 to 5 days? Are the moves of that duration, or the moves like are of longer duration? This stock moved. How many days was the move? 1, 2, 3, 4. 4 days. How much? like a percentage moved in the stock make in 4 days, 13%, right? Again, it moved. How many days did it move? 1, 2, 3, 4, 5 days, right? And then how much did it make in the 5 days? So 16%. So like this, when you look at these moves and you study, and if you find that these moves are only of 3 to 5 duration, then once you understand this, you will understand why you should enter them on the first day. If you don't understand this particular phenomena, then you will say, why not enter this on this day, or why not enter this stock on this day, right? And which is what people are doing. Why are people buying on second or third day? Why do you think people are buying on second and third day? Because they don't understand the nature of the stock moves, right? If something is going to move 3 to 5 days and you buy it on third day, what is the probability that you are going to make money? Tell me. Zero, right? So unless that is established, that understanding of the market is established, everything else based on that, and to really figure out whether these moves are 8%, 10%, 20%, so what is the realistic profit target which you can target for? If you are going to trade a 3 to 5 day move, right? If you are going to be trading a 3 to 5 days move and you are putting a 10-day moving average as a stop, is it ever going to work? Tell me. What is the probability of you making money trading a 3 to 5 day moves and putting a 10-day moving average stop? Tell me. Zero, right? It's just not going to work. So again, that's the thing which you have to look at, right? And basically, and that is the foundation, because if this foundation is there, everything will fall into place. If you do a deep dive and you look at, you ask members who've been around here and who are successful, and they will all tell you the same thing, right? You can go and talk to Kristen Kulamagi and ask him, if I want to become a profitable trader and make $100 million trading, what is the first thing I should do? And I will change my name if he doesn't say that you need to start with a deep dive, right? You can ask any trader who's been profitable, and they will have spent time doing deep dive. That, or if they are a day trader, they will tell you the secret to becoming a profitable day trader is screen time, right? And it's not like very difficult, right? And this can be done very easily. If you start today, by tomorrow, like by today midnight, you would be doing 1,000 or 2,000 thing in the boot camp. In 2 days, people did between like anywhere between those who are fast enough, they did like 3,000 stocks, and those who are like slow, they did 1,000 stocks. So in just like in a couple of hours, they could do this, right? In half an hour, they did 600 stocks. So why should it take 3 months? Tell me. Screen time is like we are looking at, like all the successful day traders, or like most of the successful day traders, they run a tape of day's action. They will like go through every single move which has happened in the day. They will mark where they should have bought, where even if they didn't take the trade, where they should have taken. If they are taken, where they should have put a stop. They go through the tape. They look at like how much opportunity was there in Nvidia. Did they capture? Why didn't they capture? What was the why? And then they capture. They will capture this kind of a thing. So next time, if this is Nvidia today, right? And how many trades were there possible in Nvidia today? Let's do this like say if you're doing this as a day trader, right? And you capture this particular Nvidia and stock, means this is the reason why some people make millions of dollars in this market, and some people struggle because if you don't have that, like let's say like up to here, right, and that's after my hour, right? So what was the first trade which showed up, which should have been taken, is this one, right? How many candles did it go up? Now you calculated 3 candles it went up, right? Now if you understand that most of the moves are of 2 to 3 candles, then you would be selling it here, right? What was the next trade? The next trade was on this candle because that was a range expansion, right? The possible next trade was on this particular thing because that was another range expansion continuation. This was a trade. Again, how many candles did it go up? 3 to 5. Now if you don't have this understanding that when the market goes down or stock go down, they only got 3 to 5 candle, what will you be doing here? You will be adding to your position, right? Because you don't have this understanding. So then there's no clear breakout here. You would have tried your luck here, it may not have worked. So maybe like in this trade, then this trade, right? And basically there was no clear reverse like trade here, but maybe as a continuation setup here, short here. So you uh, mark all these, right? You will see that like there is a guy who's featured in the next Market Wizard, like he works for SMB Capital, right? And he's made like I think more than 40-50 million, right? And basically day trading, and he runs the tape of the entire day again in the night to look at what did he miss, how did he miss, where would you have entered. Now this is what you will do. You will calculate then how much was the move, like how much was this move if I enter on this candle, right? And basically 70 cents. Like if I short it, how much is the profit, right? And that's how. That's simulation, right? Multiple time frame. If you are trading multiple time frame, you check multiple time frame. But if you are doing most short term trader, day trader, they'll be just looking at a 1 minute or 3 minute chart, right? And this is just one example. Like this, every day you look at a stock which are making a big move for the day, big range expansion kind of a moves which have gone up a lot or gone down a lot for the day. You look at every single stock like AC, that's like, and I think that's just a buyout, right? So you go into Vanda, see what was the opportunity, right? And where should it be been bought, right? There was a buy here, right? And there was a short sale here. There was a short sale opportunity here, and so on and so forth. So once you study this, um, next time you see something which is like this, you're going to be shorting automatically. You'll be shorting this as a weak structure short, right? Or a continuation setup as a anticipation uh, continuation setup, right? This is the missing piece for many people uh, for becoming profitable. So to fix this piece, and the moment you do a deep dive, even if you do a crude deep dive, it is going to change your understanding of market moves. Okay, any other question? And here is the thing, right? The more question you keep asking about deep dive, you're just wasting your time, right? Do a first deep dive. In the time in which you are trying to figure out how to do a deep dive, you could have done a deep dive, right? 600 stocks, I gave the people 30 minutes to do 600 stocks and they ended up doing it, right? How is it possible to do 600 stocks in 30 minutes? And here somebody is saying 3 months it will take him to do this. How is it possible to do 600 stocks in 30 minutes? Tell me. No. When somebody is sitting on their head holding a whip or a paddle, and they know that if they don't get it or they don't do it, they are going to get paddled or they are going to get whipped, then like it happens, right? Threat of violence, right? In 600 stocks, they had to identify momentum burst. You don't select stocks for deep dive. You just go from A to Z. You start with A and go to Z. You don't select stocks and then do it. You just do it on every stock because you want to see what is common characteristic of all stocks move. If you just select stocks and do it, then you are going to be not really getting understanding, total understanding, right? You just take every single stock and go through it. Just do it for 2 months or 3 months, and then go like then you can increase the time period to this thing, right? And you can increase your time period to 6 months or 1 year. And then first deep dive, you're just establishing this, do stock move in 3 to, then you might want to do a deep dive on entries. You might say, okay, I want to check like, okay, if I enter and if I put a stop at low of the day, or if I put a stop at half of the day, how will it work, and so on and so forth. So each subsequent deep dive, you can refine your deeper understanding of like what should be the entry. If I enter like in uh, a stock which makes 20% on first day, how much does it make, versus I enter a stock which makes only 5% on the first day, and things like that. So over a period of time, you will refine your understanding to help your trading, basically, right? Everything you take into consideration, volume, everything you take into consideration, right? You take everything into consideration. After you done with that for 2 weeks, is then you establish a process because you have an understanding of momentum burst. So then you start trading momentum burst, right? If you start trading momentum burst without this, then you are like a surgeon who starts operating without understanding whether the brain is in the knees or it is in the buttocks. Okay, I will see you some of the people. But if you are a beginner, my first recommendation is deep dive. My first recommendation is go and look at all the post on structural nature of the market. Once you understand, do a deep dive. Once you do a deep dive, and if you are really motivated, you should be able to do this in 3 days, right? In 3 days, you will be able to do this. If you are like just waiting for like you are like I when I was in school, we had some people in my class. Before starting any study, they would like spend 3 days creating a timetable to study. Or you have these people who decide to diet, and then they first plan their diet for 2 weeks, and the diet never starts. Don't do that. Just lock yourself, start doing a deep dive. Okay, it doesn't have to be, even if it is not right first time, second time you do it, you will start, have a better understanding. Third time you have to, right? And that's the thing. Okay, I will see you people sometime.